Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate jargon. Today we're diving into the latest proxy statement from LanzaTech Global. And let me tell you, this one's a doozy. It's like they're trying to rewrite their whole financial story, so let's unpack it together. This isn't your usual everything's fine report. We're talking major changes, potential stock dilution, and a plea for your votes to make it all happen. Think of it as LanzaTech asking for a financial lifeline. If you find value in extracting clear insights from corporate filings, make sure you're subscribed and join our Discord community to discuss more in-depth analysis there. Link is in the description below. First, a quick background. LanzaTech is in the business of turning waste gases into fuels and chemicals. They're all about sustainability, turning pollution into something useful. Sounds good in theory, but let's see what the numbers say. Scroll notice of 2025 annual meeting of stockholders, Accession be held. To span of 25 span scroll for this proxy statement is essentially a notice for their annual meeting. But it's not just about electing directors. There are some critical proposals on the table that could drastically change the company's landscape. One of the big things is a deal they made to get some cash. They issued something called Series A preferred stock to an existing investor for $40 million, but that's not all. They also want to issue a warrant, which is basically like a rain check for a whopping 780 million shares of stock. They're also trying to secure more financing between $35 million and $60 million by selling more stock. Bottom line, they need money and they're asking shareholders to approve actions that will let them get it. One of the approvals they need is to issue a whole bunch of new shares. These shares would come from converting that preferred stock we talked about, exercising the warrant and raising that additional financing. They need shareholders say so because these actions could significantly change who owns what in the company. They also are asking stockholders to approve what's called a reverse stock split. This is where they combine a bunch of existing shares into fewer shares. Think of it like exchanging 10 $1 bills for one $10 bill. This typically raises the price, but we will see if it works for them. And further, they need to increase the number of shares they are allowed to issue overall. This is a classic case of needing shareholder approval because these actions could drastically cut out or dilute the economic and voting power of current stockholders to the extent these additional authorized shares are issued. The agenda also includes some standard housekeeping matters, things like ratifying their choice of accounting firm Deloitte & Touche, which is pretty normal. Speaking of their accounting firm, let's scroll to how much they paid them. Here's the breakdown from the table. Audit fees were about $222 million in 2024. That's down a bit from 224. That's down a bit from 224 million the year before. This is what you pay to make sure your financials are in order and properly audited. They had some all other fees in 2023 of about $69,000. These were for things like a preliminary checkup of their internal controls. Nothing too crazy. Back to the big ticket items, let's take a closer look at this proposal to increase the number of authorized shares. It's a critical move. As of early June 2025, they had about 232 million shares of common stock issued and about 79 million reserved for future use. But here's the catch. They've promised to issue a lot more if certain things happen. They might have to issue up to 780 million shares if that warrant gets exercised, and even more, up to another 1.2 billion shares. If they secure a certain amount of financing clearly without increasing the number of shares they are authorized to issue. All these promises are, well, empty. Failure to get this approved triggers a mandatory redemption of that preferred stock. The company might not have the money to do this, so this proposal to approve more stock is very serious, as the company explains. Here's a dose of reality on the warrants. If everything goes through, existing stockholders could see their ownership diluted, meaning their slice of the pie gets smaller. Approving this increase in authorized shares comes with serious risks. As it's so substantial, it can lead to delisting from Nasdaq, even if they follow all rules. If that happened, it becomes harder to trade their stock and raise more money in the future. Now, let's talk about who owns this company. This is always good to know. Coastal Ventures is the big fish here, owning about 25% of the common stock and all of the preferred stock. Followed up second and third for major ownership are Carbon Direct Capital and Guardians of New Zealand Superannuation. Let's not forget that they also need approval under Nasdaq rules for a potential change of control, because the new stock issuance could shift ownership significantly. If they don't get these approvals, the voting power of these new shares will be limited. Finally, Proposal 10 is a straightforward request to be able to adjourn the meeting if they don't get enough votes. It's a common safety net, allowing them more time to persuade shareholders. Now for a quick look at the people at the top. Jennifer Holmgren is both the CEO and chair of the board, with Jim Messina acting as the lead independent director. They've got the standard committees like audit, nominating, and governance and compensation. Each plays a role in keeping the company in check. So what does all this mean? LanzaTech comes off as needing a major financial overhaul. These proposals are crucial for them to secure funding, but they also come with significant risks for current stockholders. They risk serious consequences when they issue such a huge stock, with a very high risk of Nasdaq delisting them. As with all stock actions, the best long-term strategy is likely growing the core business instead, as it will raise the shareholder value much higher. What do you think? LanzaTech, game-changing innovator or financially troubled company? Drop your thoughts in the comments below. If you found this breakdown useful, hit that like button and subscribe for more corporate insights. Also, remember to dive deeper with us in our Discord community. Link in the description. Thanks for watching.